Hello. The company being analyzed today is Power Mech Projects Limited. This is a construction company. Today, we're going to analyze the company's financials, what the company actually does, and its future growth plans. So let us start. First, we have a market cap of 6,886 crores. So it's not the biggest of companies, but not a small company. Current price of one share is 2,178 rupees. The stock price to earnings ratio or PE is 21.1 times. Book value per share, that is assets minus liabilities per share, is 723 rupees. Now, let us go to the historical financials. We will first start with total income in crores. Total income went from 1900 crores in fiscal year 2021 to then 3600 crores in fiscal year 23 to then 5279 crores of total turnover in fiscal year 2025. Here we have asset turnover. So total number of assets divided by the revenue. And higher this metric, the better. So it was 15.59 times in fiscal year 25. Let us go to EBITDA. EBITDA went from only 58 crores in fiscal year 21 to then jumping to 303 crores, then 421 crores, and finally in fiscal year 2025, 649 crores of EBITDA. Then we have more metrics. Let us first go to profit after tax. So profit after tax went from a loss of minus 4 crores in fiscal year 21 to then 139 crores of profit in fiscal year 22. And finally, fiscal year 25, we have 348 crores of profit after tax. Let's go. Return on equity. Return on equity was 14.21% fiscal year 22 and fiscal year 25, 16.26% return on equity, which is decent. Net debt to equity. Net debt, total debt minus the cash and cash equivalents. So you can see lower this metric, the way better in terms of balance sheet health. And you can see the massive decline from 0.42 times to 0.19 times to actually becoming negative, meaning hopefully equity did not go negative. It means that cash and bank balance is more than the total debt. So that's why the net debt formula, because of that, it becomes negative, the figure. And you can see 0.03 times in fiscal year 25. Return capital employed hit 23.01% in fiscal year 25. That is a nice return on capital employed. Power Mech at a glance. What does the company do? So, a leading industrial services and construction company providing comprehensive service in the power and infrastructure sector. So, power sector and the infrastructure sector. 15 overseas projects it has done. Okay, look at this. Order book and IPO was 3,526 crores, 24 crores in fiscal year 2013. As of March 31st, 2025, 53,000 crores. 53,000 crores of order book right now. Think about it. Right now, the orders from customers is 53,000 crores. As of March 2025, it's not even the most recent. It has entered some new geographies, many in actually Africa. We got Morocco, we got Iraq, Qatar, we got Sudan, we got Uganda. So you can see entering into new places also. And the sectors it is engaged in: industrial plants, railways, metros, roads, waters, mining. Okay, so these are the sectors it is going at, and we can see in which space it is. Here we have the business overview, okay, the different business segment in a bit more detail. First, industrial construction, overseas and domestic. First is this: erection, testing, and commissioning of projects in power, nuclear, refinery, petrochemicals, oil and gas, steel, and minerals. So, erection, testing, and commissioning. So, systems and projects. Okay. So, first of all, erection, that is actually setting up systems, then testing if the systems work, and then commissioning the systems. Okay. Then caters coal-based power plants, BTG and BOP, like boilers, turbines, and generators. So boiler turbine generator systems is used in power. It's used in refineries, nuclear, petrochemicals, oil and gas. So it is setting up these systems. Then balance of plant work. What is balance of plant? For example, you have a power plant. You have the main part of the power plant which generates the power, right? The main equipments, but you have supporting equipment to support the main equipment. That is the balance of plant. So it's setting up balance of plant systems. It is setting up, what do you say? Boiler turbine generator systems. Okay. Unit capacity is 150 megawatts to 800 megawatts. Then we have infrastructure construction. Okay, civil works of foundations, decks, chimneys, cooling towers, green buildings, coal handling plants. That's infrastructure. Then mining. This is important. Mining, development of mine infrastructure, removal of overburden, and extraction of coking oil and carrying all other activities. So it's not making a mine, it's not digging up a mine, it is making the mine infrastructure. So place has been found where things can be mined and they're making the infrastructure of the mine, then they're operating the mine. Okay, remember that. This is going to be important mining. And manufacturing and heavy fabrication. Backward integration to OEM business. So they manufacture some materials also. And this industrial services, operation and maintenance service. So they provide operation and maintenance service to their own existing systems and some systems for some clients, some new clients. This has a global presence in Saudi Arabia, Kuwait, Bangladesh, Nepal, Bhutan, and Nigeria. So these are the different segments. You will just all see the revenue contribution. Then Power Mech. So it is India's market leader in operation and maintenance services. It manages or provides these services to 75 gigawatts plus, okay, across industrial infrastructure assets and power segments. All right, so just want to show this. It has a very good market share in this. Then the established track record over the years. So first, O&M capacity we already saw 75 gigawatts or 75,000 megawatts. You can see then erection works. Erecting the power systems. Remember the projects, the power systems, the BTG, BOP systems, 30.29 lakh metric tons. 70 gigawatts or 70,626 megawatts is its capacity addition of boiler turbine generators and balance of plant. Okay, that's the capacity it has. 756 kilometers commissioning overhead electrification works it has carried out, and 2.71 lakh metric tons of structural fabrication work it has carried out. 546 kilometers of natural gas pipelines it has executed. Okay, 11.8 lakh inches of piping it has executed. 9.2 gigawatts it has commissioned of worth of capacity it has commissioned in the power sector in the overseas markets. In the overseas markets alone, 220 volt kilowatts gas insulated substations, so it can install that also, and 15 lakh square feet completed infrastructure development work within a year at AP, Madhya Pradesh. So basically, these systems, it is not manufacturing everything in that systems, but they are the one actually assembling many of those systems. Okay, very important. They are the assemblers, the installers in many cases. Then segment wise revenue. Where's the money coming from? So the dates, segment wise revenue in crores. Oh, why are there two of them? Okay, crores and in percentage. Let's take a look at the percentage. So in quarter two fiscal year 26, erection works was 35% of revenue. Operation and maintenance was again 36% of revenue. Ooh, operation and maintenance is that big. Civil works, that is the infrastructure, all of that was 25% of revenue. Electrical 2%, and mining, developer and operations, is that 3% or even less than 3%? That is very less. Mining developer and operator is MDO, remember that. So erection works and operation and maintenance. These are the two biggest one, followed by civil infrastructure. Okay. Then domestic clients base. So these are not all of these clients. It said not exhaustive. Not exhaustive. I'm assuming this means that this is not all of their clients. So we got Adani, we got Siemens, we got Tata Power, we got Indian Oil, we got ONGC, okay, NTPC, NHAI, some big clients, CESC. Okay, these are some big clients. Then investment case. This is made by the company, okay, not me. So here I want to show this. It's India's largest operation maintenance service provider with 20% market share in the power operation and maintenance. 20% market share. That's good. It's had a strategic expansion into adjacent sectors and high value EPC projects. Okay. What else do we have? Okay, yeah. Look at this. 16,700 crores worth of order book, excluding MDO, mining development operator, high margin MDO contracts it has right now worth 39,500 crores operationalized. Okay, so 16,700 crores of order book is excluding the MDO, and MDO contracts it has right now are worth 39,500 crores. So we will plus them up to get it's a multi-year. That's why it's not been included in the order book right now. Okay, and 48,000 crores of new orders so far in fiscal year 2026 alone. Okay, so big order book. Finally, we have the conference con call analysis. Here, the management has given their estimations and some insights into the company. So let us start. First, for the financial year 2026, the company has set a revenue target of 6,500 crores. Okay, so if we go back, revenue for fiscal year 25 was 5,279 crores. Remember that. So, for fiscal year 26, the target is 6,500 crores. Subject to the pace of traction in the MDO business, EBITDA margins are expected to remain consistent with fiscal year 25 levels, and the company is confident of achieving approximately 25% year-on-year growth, revenue growth. Margins are anticipated to remain stable with potential upside depending on the contribution mix from O&M and mining segments. So we got the growth expectation, we got the growth target also, we got the EBITDA margins expectation also, and we got one more insight. O&M and mining segments. They say on the contribution mix from this in the revenue, margins can have potential upside. So I'm assuming that O&M and mining segments are very much important to margins. Either they can mean if more of these segments are there, margins will reduce. But because potential upside has been mentioned, I'm assuming that if higher revenue comes from operation maintenance and mining segments, margins will increase, meaning these two are more profitable. And for the order inflow this year, we are projecting 10,000 crores. 10,000 crores of total order inflows. Remember in the previous one, 4,800 new crores of new orders so far in fiscal year 26. This was in September 2025. So, in the entire fiscal year 26, that is the remaining 6 months of fiscal year 26, 10,000 crores are the total orders. So, 10,000 minus 4,800 crores, that is what it has to achieve. Then, fiscal year 27. For fiscal year 27, we expect to maintain growth in the range of 20 to 25%, targeting a revenue in the range of 7,500 to 8,000 crores. So, fiscal year 25, 5,200 crores ish. They want to achieve 6,500 crores of revenue in fiscal year 26, and fiscal year 27, 7,500 crores to 800 crores worth of revenues. Okay. Then a question is asked. Either it's been asked by an analyst or by an individual shareholder. So, medium to long term, what would be a roughly a market share or expectation to win over this 5 to 7 years on this 3 lakh crores opportunity? So, in the power sector, if I remember things correctly, they're seeing some 3 lakh crores worth of opportunities in the next 5 to 7 years. Okay. Out of this 3 lakh crores of opportunity, we anticipate to bid for at least 2 lakh crores worth of these projects. And in the power sector, a traditional hit ratio has been 50 to 60%. So, one insight we get in the power sector, the hit ratio, meaning what percentage of projects they actually bid for that they actually get is 50 to 60% win ratio, order win ratio. So, we got this insight. And of course, the 3 lakh crore opportunity, they're looking to bid for 2 lakh crores in the coming many years. Then they're expecting 15 to 16% margin at 250 crores kind of scale at the MDO business. Okay, so in the mining developer and operator business, they're expecting 15 to 16% margin at 250 crores kind of scale. Then EBITDA margin of 23 to 25% they will achieve by fiscal year 2028 because of peak MDO revenue of 2,000 crores. Okay, so I believe for the MDO segment or the whole company, I think they're meaning the MDO segment. They're trying to say that the mining developer and operating segment, as revenue scale, the margins will improve way higher. So first insight we get, by fiscal year 2028, they will achieve peak MDO revenues of 2,000 crores, which is going to be massive from the current scale. Remember, we saw like minute, like 3% of revenue in quarter two fiscal year 26 came from MDO. They're expecting fiscal year 2028, this segment will contribute 2,000 crores and EBITDA margin can reach 23-25%, which is way more than the company's current EBITDA margin. All right. So that is it. Yeah. And of course, MDO, see, 250 crores of scale, 15 to 16% margin. But 2,000 crores of revenue from MDO, margin of 23 to 25%. So that is it. That is Power Mech Projects Limited. They're projecting some really, really good growth.